program. Gold Coast Broadcasting is not responsible for its content.
Sponsor takes additional compensation for its participation during the paid program.
Real estate loans and other financial opportunities mentioned on this show are offered by various companies, entities, and or organizations that may not be directly owned, managed, or controlled by the Real Estate Life. All credit decisions, including loan approval rate and APR, will vary based on your specific loan request and credit profile. The information provided on this show is merely to allow the listener the ability to become more familiar with such potential opportunities and to obtain more detailed information on the suitability of such opportunities to the listener's personal and financial situation from the companies, entities, and or organizations involved.
A new home you've dreamt about for years, and there's only one thing standing in your way: getting a loan. Rest assured, United Mortgage Corporation of America is here to help make your dream a reality. Get answers, get results, get the service you deserve. What kind of loan do you have? Call now at 888-LIFE-980. That's 888-5433-980. Or go to the web at yourrealestatelife.com and take action today.
Good morning and welcome to Your Real Estate Life. It's your day in real estate radio. I'm Michael Harris, President and CEO of United Mortgage Corporation of America, NMLS 3189 for the company, and my MLO number is 233410. Check us out at yourrealestatelife.com or go to unitedforloans.com. Now you're listening today on Fox Sports Ventura, 1590 AM, 97.9 FM. Right here on KVTA on Ventura, our Saturday program. Our Sunday audience is on KEarth 101, and they can stream it kearth101.com. Now, those joining us on YouTube, thank you very much for joining, and like and subscribe. You can do that right there on our site. But what I want you to do is write down our number because you're going to need it. It's 888-543-3980. That's 888-543-3980. Now, we spring forward for those of you listening in a daylight savings time area. So we're losing an hour. We lost an hour for our Sunday audience. Sorry. Now, maybe you're not joining us live this time. So you can catch our program, as I said, on our website, audio, or go to Your Real Estate Life on YouTube. So clocks move ahead. But what about your mortgage strategy? Are you moving ahead with that today? So we're going to talk a little bit about that. Global volatility, mortgage rates, and the Fed outlook. So hopefully smarter financing decisions. Now, this past week was a good example. We had global events, economic data, pulls mortgage rates in different directions at the same time. It's like a tug of war. Who's going to win? Who's pulling harder? So we saw oil prices jump above $90 a barrel. We saw them even approaching with military and tensions overseas. We saw them even escalating and potentially getting closer to 100. That's what people are talking about now. So as oil goes up, energy flows and affects the entire economy. We're looking at transportation, manufacturing, food costs. I mean, it pushes inflation higher. I'm out here in Southern California on the way to the studio today. We saw 5s as our front number on our gas prices. 5s, not 4s. And some of you are saying 4s, that's high. Yes, 5s. So we're seeing our average price here getting closer to those levels. So it is quite high here. Now, at the same time, we saw the latest jobs report come in weaker than expected. Job creation slowed and unemployment ticked higher, which normally signals a cooling economy. Now, we had 92,000 less jobs versus the 59,000 that were anticipated. The unemployment rate was 4.4% versus 4.3%. Average hourly earnings month over month was 0.4 versus 0.3. We saw retail sales -2 versus -3. And ex autos kind of flat, nothing. So February's jobs report gave the labor markets a surprise stumble. We really didn't anticipate it. It sent traders to slightly raise their bets on a possible Fed move. But gosh, it went from 1 point some odd percent to the next meeting to 3%. Wow. So yes, we had higher expectations, but really none that we're looking at right now. But we're finding some future traders are actually looking at interest rates now on the 30-year side. They're anticipating rates now between 6 and 6.5 as that average number that you may hear on Thursdays. Now, again, Thursday information is stats, statistics. It's not the week it is, it's the week that was. So we're going to hear a little bit of it going up and maybe again next Thursday as we look at what happened this past week. But we're closing loans on our side of the fence here. It's 5 5/8, 565, and 5999, 6 1/8. It really depends on what you're looking to do. Maximize monthly payment, lower fees, a little bit of both. It depends if you're a credit score. It depends on your type of loan you're doing, purchase, refinance, cash out. All of these things matter. And they matter because it's what you are doing with your real estate life. I could talk rates all the time, but it may not be the rate that you get, good or bad. So when someone picks up the phone and calls and say, hey, Mike, what are your rates? I don't know. What do you want to hear? I don't want to be whatever about it, but I need to know more. I need to know more because recently we've had clients that are loans that they've done maybe within the year. They had rates in the higher sixes, maybe even a 7 number in front. And now we're able to lower their rates. But when they got their loan, we knew market trend was going lower. We knew the trend was lower. So what we did was we minimized fees and obtained the rate of affordability. So as rates started moving down, we were then able to then get them a better execution. We were able to lower their rate and do it with little to no cost. So we have loans closing right now that we did not add anything to their balance. We didn't have them walk in funds other than their own interest and taxes or insurance that was owed. And they got a lower rate and saved money monthly. Some are taking that money monthly and dumping it back at principal to reduce their interest footprint. And we'll talk about that today as well. Talking about eliminating your debt in a third or half the time without changing your lifestyle. It can be done. There is a blueprint to make it happen. And we'll share about that. But when we're looking at 90s and possibly up to 100 for oil again, coming from the 60s in which it was, that makes a big difference on the direction of where rates were going. We hit 4-year lows. We had average rates that were below 6. We're now going a little bit above 6 again. We talk to many individuals, well, let's wait. No, let's get prepared. So if you're looking to refinance, whether it's for a reason, cash out, utilizing access to funds for other reasons, we want to make sure you're ready. We could do everything and spend no money and get ready, gather documentation, and get you approved. 888-543-3980. United Mortgage Corporation of America. We're approved to do forward loans and reverse loans in 5 states. The other states I would look to refer. Now in the other states, we can do DSCR loans, debt service coverage ratio loans, investment loans. So we can assist in those areas. 46 states, we can do those. Now the 5 states that I specialize in, California, Colorado, Montana, Texas, and the state of Washington. In those states, we're writing loans on a regular basis, helping consumers be in a better position. So if you're looking for evaluation of your current mortgage, I'd be happy to help. I can let you know whether there's something better out there perhaps, or we could have a discussion about it. My number, 888-543-3980. That's 888-543-3980. The interest or the email that I'm going to use is interest, INTEREST, at aheadformoney.com, AHEADFORMONEY.com. That email is for anything that you're looking to achieve or do, and I'm personally going to respond and answer, not AI. If you're interested, today we're going to be talking about the Money Max account, a perfect financial GPS, retiring your debt in a more efficient manner without changing your lifestyle. Same email, interest at aheadformoney.com. That email is going to get you access to a webinar that we'll talk about when we come back. But we want to make sure we're a resource for you. I'm Mike Harris, President and CEO of United Mortgage Corporation of America. We'll have more after the break.
Your equity position has started to improve? Call about the removal of your private mortgage insurance or mortgage insurance premium and save money today. Call 888-5433-980.
What if I told you everything you understood to be true about money is not? If there was a program to eliminate most of your interest in your life and pay off all your debts, personal or business, even mortgages, in as little as 1/3 to 1/2 the normal time without refinancing and without changing your lifestyle, would you want to learn more? Call 888-543-3980 and request your information today, or email at interest@aheadformoney.com. That's interest@aheadformoney.com.
Welcome back to Your Real Estate Life. It's your day in real estate radio. I'm Mike Harris, President and CEO of United Mortgage Corporation of America, UnitedForLoans.com. I'm here to talk to you about your real estate life. Now, you woke up this morning going, oh my gosh, I'm talking about my real estate life. Well, yeah, it wasn't maybe your plan. Well, it is now. So what we do here on the program each and every week, as we're here on Saturdays at 9 a.m. here on the West Coast, and we're also here at Sundays every other week at 7 a.m. as we do radio. We're here to help you and guide you through your financial future. And it's the largest item you have. It's your home. You went and got a mortgage. Okay, you went and got a mortgage. But that mortgage now is important because that is what you are trying to now pay off to eliminate your footprint, eliminate your payment, to allow yourself to gain a better financial future. So I want to make sure you are doing the best you can do for you and your family, for that matter, you and your family. So as we do the program, it's my goal to make sure that you are able to do the best you can do for your financial future. So in doing that, we look at various items on a regular basis in my business. We look at what's going on with the market, interest rates, everything else. We want to make sure that economic news, things that come out on a weekly basis, are right there on our plan. So each and every day, things change, things move. And in doing that, we want to make sure that we're sitting here and doing what we need to do. But last week, we saw the 10-year note go up 18 basis points. Holy cow, rates were higher. We saw the Fannie Mae coupon go 71 basis points to the worse. That means that we saw interest rates rise. We saw the Dow was off 1,476, NASDAQ was down 280, S&P was down 139, gold up a little bit, people hedging. We had oil up $23 a barrel. And we think interest rates went down? No, they were up this week. So we're here trying to protect you. So I'm running still a market special for my entity that we're discounting on purchases, covering on appraisals in most cases for refis, and we're trying to give another 40 basis point benefit on those refinances. And the 40 basis points isn't rate, it's fee. It can translate to rate, and we would look at your loan amount and figure out what that amount is. So we're doing our best to keep rates low. But again, I can't fight certain items. So I'm going to try. But we're watching the energy prices, supply chain tightening, inflationary expectations climbing, investors demand high yields for risk. We're watching that bond market. We're really watching the things carefully. As we're watching now, the chances of a Fed moving a quarter point on March 18th is down to 3%. We're looking at 6 weeks later on April 29th. We're looking at 17.6%. We're looking June 17th, 43.1%, and then crossing over in July, over 60%. So we're watching this very carefully, and we're going to see what we can do to get all the savings that you should have on your side of the ledger, but you need to call us now. Let's make that plan. Let's put it in action. 888-543-3980. That's 888-543-3980. Now, looking at the calendar, as I mentioned, Monday we have wholesale inventories. We have consumer credit. On Tuesday, we have the NFIB Small Business Optimism Report. We also have a 3-year Treasury auction. We're going to see what impact to bonds that does, where it's weak demand, higher yields, upward rate pressure. So we're going to see what the demand is. So that's an important day. Wednesday, we have CPI. It's a major event. We have the headline and the core number. Hotter inflation, bond likely to rise. Cooler inflation, rates may improve. So we're going to see what the inflationary numbers are doing. We're looking at mortgage market reacts in minutes. I mean, it's my eyes are really tuned into this in the early morning because it sets the trend in the direction where existing clients and potential clients are looking to operate and move to and from. On Thursday, we have initial jobless claims, producer price index. The 30-year Treasury auction is coming. Again, we'll see what activity brings. We have the PPI out as well, producer price index, CPI, consumer price index for future movement. We have Friday, the University of Michigan's consumer sentiment, and we have inflation expectation coming out as well. So a lot of things happening as they do each and every day, and we watch these things very carefully. So I want to make sure that you can do what you do so I can do what I do best, helping you save money. 888-543-3980. That's 888-543-3980. I'm looking at various items daily, and and other people in other professions do that daily as well. And one joining us today, we have Marisha Charbonnet. Marisha Charbonnet with Family Security Law Group. Today, she's discussing what happens in your family business after death. More importantly, who has legal authority to run it? Marisha, what do you have for us today?
Good morning, Mike. Thank you for having me on your show. This morning, I wanted to talk with listeners about a really important asset that all too frequently gets ignored when setting up a trust, and that is your business. For many small business owners, they may be assuming that they will be retired and their business sold or dissolved at the time of their death. For those with family businesses, there is often a misplaced reliance that someone will just take it over. Unfortunately, things are rarely that simple. Think about just the basic necessities that are needed to keep a business running. Things like authorizing payroll to issue paychecks or accessing the business bank account to make deposits or withdrawals. If the business involves a licensed skill like an architect, a lawyer, or doctor, things get even more complicated because of licensing rules that may require another licensed professional to immediately come on board to operate the business. Then there's the issue of client records and confidentiality concerns. For many businesses, they're operating as an entity, like a corporation or LLC. In those situations, it is important to ensure that your individual interest in that business entity has been properly assigned to your trust. If not, the assets that are part of that business could be subject to probate, and your trustee may have no ability to participate in the management or operation of the business after your death. Just selling the business could turn into a nightmare if the only shareholder or LLC member was the person who died, as no one would have authority to negotiate the sale of the business or even sign the sales contract. It could take months of court involvement to get someone appointed with authorization to operate and sell the business, and the delay could cause the value of the business to deteriorate in the meantime. For those businesses in which there are multiple business partners, things can get even more tricky, particularly if the existing partners don't want to become partners with their dead partner's family, or if the dead partner's family wants to cash out their interests in the business. Fortunately, life insurance can be a great tool for addressing some of those concerns, as it can create the cash needed to buy out a dead partner's interest. Ultimately, proactive planning is the key to ensuring a smooth transition of your business and financial security for your loved ones. For anyone who has questions regarding estate planning for a business or estate planning in general, I'm here to help and can be reached at 805-496-4681 or at FamilySecurityLawGroup.com.
Thank you so much, Marisha, for such timely information, because this conversation ties directly into real estate ownership, rental property management, and multi-generation wealth planning. And it's really setting the tone going forward and thinking ahead and not in the spur of the moment. And many people make decisions when they're prompt to do so. They're not anticipating and looking forward and thinking about what should and what can occur. So I thank you for that. Good information. Anyone who has a business and it solely relies on you, you need to think of these items ahead of time. If you care about you, yourself, your family, the business, and those who work with you and for you, it is something to definitely do ahead of time. So we talk about mortgage and mortgage financing and lending. And in doing that, we're choosing the right loan for your unique situation. Many individuals, if I line them up, everyone would take slightly different terms, whether it's the general 30-year term, or we could do a boutique 28-year and all these fun little times in between. But it also looks at the cost and the affordability factor, because the longer you stretch a loan, of course, the lower the payments, but the more interest that you're paying over the life of the loan. So in our next segment, we're going to go dive in to the Money Max account. We're going to dive in to interest rate versus interest volume. We're going to dive in to showing you how you can change what you do and how you make payments to your lender, still be on time, still pay your principal, but pay less interest. And we have a webinar that we do on Tuesdays. It's been moved up a bit. It's at 4 p.m. Eastern, or actually, sorry, Pacific time, daylight savings, 4 o'clock here on the West Coast. It's changed to your market. But at 4 o'clock, interest at aheadformoney.com. Write down that email. It's going to allow you to gain entry to a 1-hour webinar to help eliminate your debt in as little as 1/3 or 1/2 the time without changing your lifestyle. Now, when you're able to do that, it makes a big difference in many other decisions in your planning. So it's information. It's not going to hurt. If you cannot attend that time at 8 a.m. Pacific time, we have another webinar that also gets you that information, and you can join then. If any of those two or both of those are not available to you, let's have a one-on-one conversation. I'll have that with you. Either way, and always send me an email, interest@aheadformoney.com, or call 888-543-3980. I'll get you access. I'll get you some information. Perhaps we'll set up a meeting. We'll go on camera together. We'll talk. We'll understand where it is and what direction you want to head and what's going on with your real estate life. Because that's what's really all about. It's not about everyone else. It's about you. We've been able to help families who are getting started, looking to save, going further in future for their college funds for their family. We've had individuals that are moving up, moving down, moving sideways, providing for their retirement. Because it's eliminating debt to create wealth. It's being able to get off the bank's plan where you're paying all that interest volume on your mortgage statement. When you look at that mortgage statement, how much money is going towards interest? How much money is going towards principal? Not as much as you like going towards principal, huh? I want to help churn that around a bit and make more money go towards principal reduction, gaining more equity, and at the same time increasing your credit scores. Some of you may not need them increase. You're actually looking pretty good, but let's maintain them. But some people I spoke to this week are in the lower 6s, needing to get higher, various concerns and various pressure. So it's about increasing your discretionary monies, increasing your ability to have more monies monthly that allows you to live comfortably, but at the same time reduce your interest footprint. If we can achieve all of these items, we win. We win together. Personally, I was taking 26.4 years, and I was taking it personally down on my own before I discovered this program to utilize. I was taking it down to 12.3. I was proud of myself. I was saving a lot of money. Through the program, it took me down to 7.9 years. I wasn't perfect. I was missing the mark. Maybe I was on the green, but I wasn't in the hole. So I want to make sure you improve your thought process by gaining better information. I mean, you drive in your car and you use perhaps a GPS, whether it's on your phone or in your car, and it gets you your destination in the quickest and easiest way possible, avoiding all accidents, detours, and you get to your destination, even though you know how to get there. Why not do that with your finances? When is the last time you reached in your glove compartment and pulled out a roadmap? You tell me. When was the last time you've done that? Some of you, or maybe you do still. but you have no idea what's going on in between. You could be taking a journey on a 50-mile highway, 2 lanes, one way each way. And on mile 46, the bridge is out. You got nowhere to go. You have to U-turn and go a detour and go find another way. Now, mind you, when you were heading on this road, people were waving to you and you thought everyone was friendly. They were trying to tell you the bridge was out, but you didn't know. So now you're upset, you're mad, your time has been wasted. So about 4 or 5 miles the other way at this point, you start waving to people too, because you realize you probably should tell them, but they don't understand either, and it just gets repeated over and over. You don't repeat the same mistakes. You learn from them. And my goal is to help you learn sooner and faster to not lose money or time for you and your family. Been doing this now in my 39th year, and doing it that long, I've seen a lot of good, a lot of bad, a lot of people who wanted to do certain things for certain reasons. One example, had an individual, I was going to lower his rate, not charge him a dime because the rate made sense to not have any fees that he would be associated to. So I was just saving money. He could take that extra money and pay off his principal sooner and be in a better position if he chooses, or he has extra money. But he had explained to me that he couldn't afford to lower his rate any further because he needed all the deductions he can get. So a higher rate, more deductions, better off. Well, first of all, he's not getting 100% on the dollar. But I kind of thought about it for a moment, and a couple of times this has been on live radio, I've done this. But I said, well, let's get you and your financial planner together and we'll make all of us extremely happy. I'm going to raise your rate to 12% and increase your deductions. Doesn't make sense, does it? No. Now, in some cases, an extra deduction, great, okay, but you're limited and you're not getting 100%. So it's very, very difficult to see the logic there. Same logic that people say if you refinance, you skip a payment or two. You don't. You either walk in your interest or finance the interest. You don't skip a payment. It may give you the illusion you do, but you don't. So if that was the case, you just refinance every month, you'll never have a payment again. So I want to make sure we have factual information and information that makes sense and makes a difference in your real estate life, whether you're purchasing or refinancing going forward or in reverse, whether you're doing it for a primary purchase or investment property. FHA, VA, we're here to help. If you have an FHA loan or a VA loan you've done in the last year or two or so, it might be a great time to lower that interest rate without cost. I can talk to you about that. We're helping people who have equity in their home with home equity lines of credit. We're able to gain access to funds with interest-only payments. And actually, that's simple interest, not amortized interest. And there's a big difference there. And we're going to go into that more today. But that difference alone is going to eliminate your interest footprint. But it's using it properly that is the key. So when I look at the economic news coming out every day, I look at what's going on in the market trends, I see the direction of interest rates, that helps me give you better information, of course. But I don't expect you to sit there and watch the computer hit refresh, refresh, refresh as you go through the process. That's where you have professionals working on your team. But it does take one professional to stumble, to cause a problem, and have the defense come in. So my job overall, I'm working with all your professionals, your tax, your financial planner, your realtor. When it comes down to it, you eventually have sub-professionals where we get the appraisal, the home inspection, various things that are going on a loan process, if it's a purchase, or differently if it's a refinance. But we make sure everyone is on the same page, escrow, title, all the players, listing and selling. We want to make sure everyone understands what's going on and everyone's there advocating for you. If this is something that sounds good for you, whether you're doing something this year or next, or planning, or just want to understand what your options are, call us today. 888-543-3980. That's 888-543-3980. I'm Mike Harris, President and CEO of United Mortgage Corporation of America. We'll be back right after this break.
Looking for a place to start? United for Loans is the place for you to start your refinance or purchase process today. Call 888-5433-980.
Yes, it's a little scary right now, but every crisis presents an opportunity. How many times have you looked back and said, why didn't I act? Do not try to navigate lending without a map. Tune in Sunday at 7 a.m. on K-Earth 101 with host and CEO Mike Harris of United Mortgage Corporation of America to discuss your real estate life. What should I do? Buy, refinance, sell, or hold? United Mortgage Corporation of America is open for business and ready to lend. Visit unitedforloans.com or call 888-543-3980.
Lending can be a bit confusing. Numbers can be tossed from one direction to another. How can you make it all stop? United Mortgage Corporation of America, unitedforloans.com can be your guide. Call directly at 888-5433-980 for what you need to know when financing a home of your dreams or commercial property. Call now at 888-5433-980 or visit at unitedforloans.com. That's 888-5433-980.
Welcome back to Your Real Estate Life. It's your day in real estate radio. I'm Mike Harris, President and CEO of United Mortgage Corporation of America. Visit us at yourrealestatelife.com or unitedforloans.com. You're listening today on Fox Sports out here in Ventura, 1590 AM. We're at 97.9 FM KVTA. Our Sunday audience is on K-Earth 101, also streaming at K-Earth101.com. And our YouTube channel is at Your Real Estate Life. Like and subscribe if you have the opportunity. You can catch the audio of our program on our websites, but you can call us at any time, 888-543-3980. That's 888-543-3980. We've been talking about the markets. We've been talking about interest rates moving off their lows of the last 3 or 4 years. We have a lot of things going on, inflationary news, information, oil prices rising, causing a little bit of a hiccup. But that hiccup, I've been actually sustaining a bit by giving benefits to our loans, in some cases up to 3/4 in fee, in some cases 40 basis points in fee, that we've been able to gain back for our clients. So I'm trying to kind of moderate a little bit of the volatility, but that can only last so long. So we'll see how long that lasts. But right now, it's important for you to look at what your alternatives are based on you paying too much right now, because your lender loves you and you just don't need that kind of love in your life. If you're renting, your landlord loves you and you need to make a change because you don't need their love in your life either. So I want to make sure we can look forward and plan and understand what triggers there are to move forward. Now, speaking of triggers, I use the word. The trigger law, March 5th, went into effect on triggered leads. So you may be getting, of course, less phone calls now for solicitation when it comes after running credit or inquiring about certain things. So that's changed now for the lending side. So it used to be if you didn't get on the opt-out pre-screen list and you ran credit, all of a sudden you got 30, 40, 70 phone calls with people soliciting you for lending because your information was then sold by the credit bureau. So now it's just going to be ones that you opt into, ones you have a financial relationship with, or the current servicer or lender who did your loan. So you're still going to hit and get hit, but not as from strange places you didn't expect. I would be sure as you do share your information or you go online, when you register, sign up for things, you're giving permission. So you want to make sure that you're doing that in the right spot. You're not just inquiring and then all of a sudden this one who owns this, who owns that, who owns this, all of a sudden the lender's calling you and you didn't call the lender, but that's part of their systems. So just be aware of that. If you want more information about that, give us a call, 888-543-3980. The buck stops with me. As President and CEO of United Mortgage Corporation of America, I'm not selling your information. I'm providing solutions. If that's what you want to do, I'm here for you. 888-543-3980. Now, we talked about the Money Max account, and it's not just for mortgages. You can use it if you rent and don't have a mortgage, or if you do. It allows you to pay off your debt in as little as 1/3 or 1/2 the time without changing your lifestyle, or as little as 5 to 7 years. It's looking at your income, every last penny of it. It's also then looking at your liquidity, but also setting up comfortable boundaries, understanding what can't be touched. It's looking at investments, yields, and items that you have there, tax structure, of course, and business planning. It interacts with all of this, but it doesn't touch it, doesn't change it. No one accesses directly your accounts. It's based upon good information in to get good information out. We're putting in your monthly, your quarterly, your semi-annual, and your annual items, and we're putting in there correctly when we look to go forward. With that said, it's perfect financial predictability, just like the GPS in your car. We want that with your finances. We don't want guessing. It's going to look at your current debt structure. It looks at the cash flow positions, liquidity reserves, long-term objectives. You're able to add actions. You're able to add new income, add new liabilities, do what-if scenarios, run charts, run graphs, do everything you would imagine when it comes to planning your financial life, your personal financial roadmap. It gives you execution 24/7, regardless of volatility. You could be salaried, self-employed. You could be getting started in your 20s, 30s, 40s, 50s. You could be 60s, 70s. I've written it for someone in their 70s. Haven't gone further past that at this point. But bottom line is, it's a blueprint to become debt-free, or being able to manage your finances and make sure you keep that money on your side of the ledger and eliminate your interest footprint. Now, interest rate is a percentage, but that's not what you're paying back when you pay debt. It's the interest volume. It's the term of the loan and the type of interest that you're paying and how it's set up. Where a mortgage typically is an amortized loan, more interest early versus later. Simple interest is a level interest rate. Eventually, someone wants to get paid off. There might be a balloon payment in 10, or there's amortization then. But you have options to up or redo, or the debt could be eliminated by then based upon factual information. Now, the timing of extra principal is important. A lot of times people throw extra principal, and sometimes it sits in a side account and doesn't go to work for you with your current lender. So it's important. The timing is important. Liquidity management's important, because you may throw extra, then all of a sudden you go, oh my gosh, I'm in trouble next month. So it's understanding your income and trends and having that perfect GPS helping you and giving you efficient information is important. It's allocating that cash flow coming in. If you also have a bonus coming in, it doesn't mean all of it gets spent. Maybe you eliminate some decent debt, create additional cash flow, and that helps you get through and it works better for you. But there's so many decisions to make, and the more debt you have, the more decisions that you can make incorrect decisions about. Now, there is strategic refinancing that we could talk about. Sometimes it's freeing up monthly money to allow more debt to be paid. So sometimes it does make sense, sometimes it does not. But that's where a home equity line of credit comes in, that you're able to use it, and what you use, you pay, but if you don't use it, you don't owe. But it's there in case you do. And usually it's when you need something, you can't get it. And when you don't need it, that's when you can get it. So if you get it and qualify for the most you can without affecting your rate, you gain it to have flexibility, because flexibility allows you to make other decisions. So it's using the mortgage structure better. Cash flow acceleration is good. Liquidity retention, we want you to be comfortable, be able to sleep at night. We want to minimize your interest with maximizing principal reduction. Now, some of you, as I mentioned in the example, need that interest write-off. Well, if we're increasing cash flow and monies, maybe you're buying another property or another investment that gives you another set of money coming in for additional income. So some is not about debt reduction or elimination. It's about freeing up to allow additional assets to play. And we're able to do that as well. So it's understanding what it is, what your goals are, and having that intelligent conversation and coordination for those results. So although we're springing forward and you're losing an hour, I don't want you to lose time handling your finances in an inefficient manner further. My goal is to save you that hour, give it back to you, and actually give you many more hours of stress-free time, because you're going to spend less time working on finances because you have someone diligently 24/7 feeding you right information. I'd love to do a demonstration for you. Call us right now, 888-543-3980. That's 888-543-3980. Sign up for our webinar, get access information, interest at aheadformoney.com. I'm Michael Harris. We'll have more after the break.
Get pre-approved for your home purchase. Your landlord loves you. You're making their mortgage payment. Own for less than you pay for rent. Call 888-5433-980.
What if I told you everything you understood to be true about money is not? If there was a program to eliminate most of your interest in your life and pay off all your debts, personal or business, even mortgages, in as little as 1/3 to 1/2 the normal time without refinancing and without changing your lifestyle, would you want to learn more? Call 888-543-3980 and request your information today, or email at interest@aheadformoney.com. That's interest@aheadformoney.com.
Money must be funny in a rich man's world.
Welcome back to Your Real Estate Life. It's your day in real estate radio. I'm Michael Harris, President and CEO of United Mortgage Corporation of America. I'm here to help save you some money. Saturday morning, Sunday morning, it's the weekend. A lot of stuff going on. You might be running. You might be getting ready for the Oscars. You might be, you got a lot of things going on. I know. And what am I doing interrupting your morning? Well, write down the number. You're going to need it. 888-543-3980. That's 888-543-3980. Remember, you lose that hour, but I want to help get it back for you, saving you money, making things more efficient when it comes to your finances. I'm a mortgage banker. I've been doing that now for 39 years. I'm on radio close to 20 years. We talk about personal finance. We talk about mortgage finance. We talk about getting pre-approved. We talk about interest rates. We talk about the market. We talk about what's going on in the economy, how it affects interest rates. But today we're talking about efficiently paying off your debt in the best way possible to keep more money in your wallet. We're helping other professionals, mortgage loan originators, insurance agents, financial planners, CPAs, divorce professionals, realtors. We're helping them understand that their clients can benefit with sound personal financial moves and decisions. You hear advertising all the time about, oh, it does this and we could do this and we could do this and that. Why not have something personally tied to you that you control, that gives you perfect information, gives you perfect advice, doesn't talk back to you, smarter than you and me and many others in the room, and allows you to improve your finances by, paying them off in little as 1/3 or 1/2 the time. I've seen 5 to 7 years debt-free. Now, debt-free may not be your goal. You might be looking to use the money to buy more assets, as I said previously. But we're seeing with rates about 6%, people's interest volume on their first payment is close to 72%. Take a look at your mortgage statement when you have a chance. Take a look at it. I know you're driving, but take a look at it and understand how much money goes towards your principal and how much money goes towards your interest. And then take a look at your number that you thought you closed at. It's different. It's how you pay it back that's going to make the difference. It's not the rate, it's the interest volume. And I want to go over that with you. We'll continue to watch global volatility, how it influences the bond market, and how my clients lose or even can save money each and every day, many times over. We've had instances where I've saved $600, $1,000, $2,000, $5,000 in one trading day based upon locking and not locking a loan. The earlier you lock a loan, you're secure, you're done. The market moves up, down, and around, you're locked. Yes, people will say, I could, get you a float down. You're not getting all of the float down. That doesn't really help, but you paid a lot of money extra to gain the lock because you bought the money longer than the 8 days, 10 days, 12 days. You maybe bought 30 days or 45 days. That to me is getting rid of the technical aspect in a market that still has room to potentially improve a little bit to save you a little bit of money up front or money out of your wallet to not buy down the rate. In some cases, as I explained, we're doing loans for individuals that we did a little to no cost, and then we're redoing them to little to no cost by lowering their rate further. And it's not money that was illy spent where all of a sudden they're not going to like me till month 47, almost 4 years in. So recovery time is very important when you look at the costs, but it's also important on who's spending that money on your behalf. Is it you? Is it the seller? Who is financing the buy down or that cost? That's important in that decision. So some of the questions that we get, are rates falling soon? Well, a few weeks ago they were, and they did. Now they're back up a little bit with geopolitical items going on. Will they come back? Perhaps. Are they going to go down a lot? Probably not. Is more the difference going to be into your sales price? Yes. The market and the direction of where you're looking to buy is important. And that's where your professionals come into play. You think hiring a professional is expensive, try hiring an amateur and see how that works for you. That's going to be a gift that keeps on giving. So you need to talk to someone in the market in which you're looking or want to be, understand the general trends of what's going on, and some of it's not on the popular sites. Now I can run an 8 to 10 page property evaluation that I can do from a lender's point of view, but your realtor has valuable tools that they can help you with, and then make your decision upon what it is you're looking to achieve or do, whether you're buying, selling, or maybe you're staying put, but you're just trying to understand where things are. And if you're staying put, I can maybe help you with that as well. 888-543-3980. That's 888-543-3980. Now, the idea of should buyers be waiting? It depends on your personal timeline and inventory access, not the headlines. So you got to stop watching the headlines for that. It's really what it is you want to achieve and do. What influences as to why you're moving? Is it the same neighborhood, different neighborhood? Is it for a job? Is it for children? Is it for school? What is influencing you to make that decision? So if it's affordable, as I said earlier, marry the home, date the rate, divorce the debt. So one at a time. If you marry the home, then we'll decide together the best rate and option to decide later in the future whether we're dating that debt. And then once we have that debt, then we want to help pay it off the most efficient way possible by divorcing it. So we can go over that process as well. But it's taking one step at a time, but looking forward to the actual extra steps that are going down the line. Because sometimes you look at a fixed rate, sometimes you may look at a variable. A variable, oh my gosh, a variable. Well, a variable rate loan may have a lower start rate, which helps you get into the property. And maybe if we look at market trends and it makes sense for you, and we're looking at staying in the loan maybe 6 months, a year or whatnot, based on what we spent to get in, maybe it's beneficial to gain that to then get the fixed rate later. So those are market items and risks that we would evaluate together. I'm always asked about, is refinancing over? It's never over. Never. Because there's always a reason to refinance for a purpose. Some people refinance to pull more money out, to build an ADU, pay off debt, travel, do other things, college funds. So there's always a purpose there. There's always a reason also for those who even have a 2, 3, 4, or 5% loan right now, because you may have a 24, 36% credit card. You may have a personal loan, a car loan, a student loan. You may have a lot of other debt that's bringing the average rate well over 6%. If you had equity available and a refinance potentially is there, you're able to free up more discretionary money, comfortable living, extra money at the end of every month, not for you to go blow and spend, but maybe putting it towards some of those debts, the first debt, building up reserves, having a more comfortable outcome, and in most cases, a lower monthly payment. Now, the goal is not to push you backwards further by taking shorter debt, making it longer. So we evaluate those items as well. We want to make sure it's logical, makes sense, and you know you have a better outcome ahead. But sometimes it's a one-step, two-step, or a three-step or more process, and it's gaining the best result. You may have had an unexpected health-related issue causing additional expenses, and you know perhaps it's temporary, and there's a new, more income coming back in, and that item can get resolved. But we got to get you through those rough waters. We got to get you through that process. And that's what I do and look to with a perfect financial GPS, but also evaluating you from a mortgage perspective. And throughout my days, throughout my weeks, throughout my months, throughout the years I've been doing this, that's what I do. Whether it's somebody who's starting the process or it's somebody who's been doing it for many years and the process has always been changing. When I got started, we were there with typewriters and correction ink, bubble jet printers and fax machines, and pagers were the new biggest thing. Cell phones weren't quite there yet. And when they did, they were very expensive, very big monthly bills, and they could be up to $2,000 a month just for the bill. So as time has allowed and as lending has evolved, information is faster and moving around in a much significantly faster pace. You're able to work in much more larger areas because technology allows that. Before, we used to have territories. So I was working in an area here in Southern California primarily, and then expanding it out as technology allowed, and then now working in some cases throughout the United States. We're efficiently watching and understanding the rules, the laws, and the limits for certain markets, and relying on professionals in each of these markets at every turn, making sure your journey is the best one possible and the most efficient one. But just because you closed doesn't mean you did everything right. So that's where sometimes I help and I evaluate what you have so you're aware of it, so you're aware of your next move if there is one to be had. As we're helping people identify their loan, identify the interest being paid, the principal that's being reduced, understand their new debt-free date compared to what they have now, understanding how much more money they can save, that is my primary focus after sure your journey is an efficient one. It's a journey that makes sense to you, your family, and everyone else involved. It's making sure that you thought a little bit more about the decision you made rather than just following what everyone else was doing. A lot of times people get in line, they see a line, they go, okay, everyone else is in line, I'm going to get in line too. And then you ask, what am I in line for? Because you don't know. You just don't know. Now, when I'm asked that question, what are your rates? And I address this regularly. I need more information. Is this for cash out, rate and term, purchase? Is it for short term, long term, primary home, investment property? Are you salaried, self-employed? Do you have 2 jobs? Have you been on the second job? Have you changed jobs? Do you have a 2-year history? There's so many questions. And rather than coming to you like a fire hose as I just did, it's understanding your story better. And as I open that up and peel back the layers of the onion and understand what's going on, it allows me to then tailor some ideas and thoughts that come to my head. Because right away, self-employed. Are you writing off your income legally, and are you showing a lot on the return? The answer is no. We're looking at cash flow and bank statements. How long have you had your business? I aim to those directions. Do you have a partner? Do you have a percentage of your business? Are you a corporation? Are you salaried from your business, or are you filing Schedule C? I have an underwriting background as well, so I want to understand. So when we gain an approval, we have little to no conditions on a loan because we were prepared for the outcome. So that's very important. Let's not throw it against the wall, hope it sticks, and oh my God, we got 22 things we got to go chase later. But the longer a loan goes, the more we have to update things because another month may go by and you've got to update a bank statement. If you're salaried, another pay stub. If we're profit and loss statements and we have to do that for a loan, then that would be the case. If you make another mortgage payment, I have to show that that was on time without rerunning or wanting to rerun your credit. Timing is important. Understanding that is what I do. I don't want to spend your money because I spend your money the way I spend mine, sparingly. I want value for my money, and so should you. So I don't lead with running credit. I ask you how your credit is, but I don't lead with that. I want to gather documentation, put the file together, make sure we're good, whether it's your debt to income ratio or whether it's your bank statements and cash flow. And then we'll look to have credit be the last item before submission. I don't want to have surprises there. So we're looking for honesty and we're looking for good conversation. But if you're telling me your consumer score is a said number, your mortgage score is slightly less. So we talk and work together for the best outcome possible. And that's what a good relationship does. And I want to be that relationship when it comes to your personal finances journey, as well as your mortgage journey. Been doing this a long time, and my goal is to save you money. 888-543-3980. That's 888-543-3980. I want to thank our guest today, Marisha Charbonnet, who joined us, talking about what happens after you may pass in your business, whether there are licensing issues or whether your business can survive. And if you're the key person, who else would be there to manage that business if it's not your spouse? Very important items, and financial planning or estate planning is very important regardless of your issue. Marisha's been on our show talking about college planning and various items there, pet items, so many things that come into play when you're talking about estate planning. But it's been my pleasure having you here today on Your Real Estate Life. As said, my name is Michael Harris. Been in the business for 39 years, been in the radio almost 20. United Mortgage Corporation of America, UnitedForLoans.com. The radio site is YourRealEstateLife.com. Our show is airing on Saturdays at 9 a.m. out here in Southern California on Fox Sports Ventura, 1590 AM, 97.9 FM, KVTA, and streaming at kvta.com. Our Sunday show every other week is on KEarth 101, KEarth101.com, 888-543-3980. Follow us on YouTube at Your Real Estate Life. Until next week, what kind of loan do you have?
Corporation of America, UnitedForLoans.com will continue to take your calls after the program. Call now to start your home loan process at 888-5433-980.
Remember, you're losing an hour here on the West Coast. Make sure you understand that. Now, you don't have to run all the clocks. A lot of clocks are doing it automatically, like your cell phone and everything else. But you got a few of those running around the house. So make sure you set those, be on time. Make sure you get the job done and get to work where you need to be on Monday. So it's very important. I want to make sure to get that hour back to you somehow. Let's be efficient. Hit me up at 888-543-3980. We'll talk to you again next week. What kind of loan do you have?